With Mr. Cooper Howard, joining us, Director and Fixed Income Strategist at Schwab's Center for Financial Research. Been a crazy couple days, Cooper, interesting one for markets. Kind of start with, I guess, Powell today. It seemed like his language is getting a little bit more welcoming, possibly.
Yeah, I think you're probably right that he did kind of get a little bit more welcoming to a rate cut, or at least I should say he didn't squash a rate cut. But really, I think the overall picture is that he's really reiterated the same points that they've had before. They've preached patience. They're going to try to see where inflation goes. What I thought was also notable was that he brought into, or he mentioned that kind of their dual mandate is becoming more imbalanced. So I think that that puts a little bit more weight on what we'll see from the labor market. He did mention that if we see a slowdown in the labor market, then that could be a further impetus to cut interest rates. So I think that that's something that was of note. The other thing that I would take note of, or I would say about his Q&A with David Rubenstein, is that he didn't hint that they are going to cut rates at the July meeting. So I know that there's kind of been this talk in the market about potentially cutting rates at this month. He didn't give a signal to that. He even went out and said, I'm not giving any signal about what we're going to do. I think if they were going to cut this month, he would have used this opportunity to kind of lay the breadcrumbs to it. So I think that that was the other thing that I really took away from that Q&A.
Okay. Yeah, I like the point about the job market, because it does seem when he is led with optimism for the most part in his economic discussions, to kind of start, to acknowledge the softening seems like a notable thing, right? We got to acknowledge it, right? It's very real.
I think so. And we know that this Fed has been laser focused on the inflation front for years. So now that inflation's starting to trend lower and they expect that it's going to reach their 2% goal, and we see that the labor market softening, that does kind of bring the two further into balance. So I think that that's interesting that he highlighted that. So I think that going forward, what we'll watch for is kind of to see if there is further weakening in the labor market, and then maybe that signals an additional rate cut this year. But at this point, what we're expecting, Oliver, is September is likely going to be the first rate cut in a series of cuts later down the road.
The market, we're just looking at Fed funds futures. 100%, it seems like more locked in than ever, basically, from September onwards. So should we then be looking at series of cuts too, Cooper? You think by the time we get there, it'll be a traditional full easing cycle, a sustained cycle?
Yeah, saying that our first expectation is a September market cut when that's 100% Fed funds futures odds really is going out on a limb, right? So we do expect that it's probably going to be kind of the traditional easing cycle. I know there's been some talk about a 50 basis point move in September. I'd be surprised by that. I think that they, again, want to continue on the slow, patient path, see that they make sure that they don't cut too fast, too soon, and let the inflation kind of issue rear its head and get out of control. So I think, again, they're going to follow a patient path to get down to a more normal level. The other thing that I took away from Powell's speech or Powell's Q&A today, and he's reiterated this and made mention of this, is that the end destination, that R star, if you will, or kind of the end Fed funds rate, is likely going to be higher than where we have seen in the past.
Okay. Cooper, finally, in terms of what moves the needle, we've got retail sales tomorrow. Not a big week for economic data. Some auctions here and there. If we are now trying to predict like November outcomes, if folks are arguing that's like deficit oriented, then should we start to see some term premium show up again? Like if that's actually what's moving the market?
Yeah, I do think that it is a relatively light calendar week for the economic information. However, we do have a host of Fed speakers. So I think that that's going to be something to watch and kind of see, did they lay hints as far as further past what they're going to do in September? I would be surprised if they do. I think that they'll continue again on this measured approach.
Okay. All right, Cooper, good stuff. Thanks for the conversation. Good preview for this week.